Hello and welcome once again to Policy Bazaar. I'm Arjun Bhagat. Now, in our last episode, we met Neha Giriraj, a 26-year-old single working woman, and helped her work out her ideal financial portfolio. Today, we meet Dhruv Sriram, a 32-year-old software professional, and assess his investments with a view to help him plan a solid financial portfolio, keeping in mind the short and the long-term perspective. Now, financial planning is an exercise that needs to be taken seriously, and it's never too late to start. To help Dhruv, we have with us our financial expert Yashish Dhaya, co-founder and CEO of PolicyBazaar. Welcome to the show, Yashish. My first question, young people, young marriage, does it change the way you financially invest and plan your life?
Absolutely, it does. See, you're an individual with or without an income before you get married. Once you get married, the situation is slightly different. You have two kinds of families that get formed. One is a double income family and one is a single income family. And of course, in a single income family, usually you have an immediate financial crunch because you've basically got the cost of two people on one person. And the things you start having, like I remember before I got married, I was living in a one room place. Things were different.
That doesn't work.
That doesn't work any longer. Your wife is not going to move into the same place with you. So a few things change. So your costs do increase. Plus, some of the planning starts. You start thinking because kids are going to happen in some time, and they bring their own host of expenses with them. Suddenly, you have dependents. So your being there becomes critical to their survival, specifically in a single income family. And so obviously the dynamics change, and you need to reassess and readjust according to those.
What about, there's always this hesitation to discuss finances amongst young couples, and what do you think? Do you think they should really discuss it and plan things out a little more systematically?
I think like everything else, a good relationship is based on trust and respect. And I think discussing, as long as both individuals are intelligent individuals, which I'm sure they are, they should certainly discuss these matters. Not all the time. I'm not a big fan of very systematic sessions, etc. But they should basically assess their goals. What are their objectives? What are the risks? Financial planning is still the same, right? Long-term objectives, short-term goals, short-term objectives, and the risks associated. And discussing those openly only strengthens a relationship. And more importantly, knowledge between the two partners, specifically in situations of risk, is very beneficial because the other partner is very aware. Otherwise, the stress caused is very high if the other person doesn't really know what to do in that situation. So I think, of course, they should discuss these matters.
Right, Dhruv, now, give us an idea about, for your financial status right now, what kind of financial investments are you making, and that's how Yashish can really assess your portfolio and give you suggestions. And also, if you have any aspirations and dreams that you want to share so that, we can try and mold that into your financial portfolio.
So currently, if I say it's not very structured kind of a portfolio, all I can say is I have been doing a fair amount of savings in the account itself and a tax saver FD that I've got for 2 lakhs, and it's at the rate of 8.75%. So basically that's the stuff. And marriage has happened, and it's been 2 years. So I'm actually looking for instruments which could help me to retire at the age of 60 with an annual income or a monthly income, say, of 2 lakhs or 2.5 lakhs per month.
That stage. What's your income today?
The income is, my total income per annum is 15 lakhs right now, the household income.
Okay. And your monthly expenses at present?
So those are close to 35 to 40K.
Okay, so that's quite beneficial. And your total savings are about 2 lakhs. Any particular investment plans that you have?
Not right now, and I forgot to say I have a loan that has to be done with. There are 30 months that are remaining for that loan, and the EMI that I pay currently is 28K per month. So that's gonna be over in 13 months from now.
Any PPF or insurance policies that you have?
I have insurance policies, but I have 6 of them, and all are LIC Jeevan Anand, so for a sum assured of 1 lakh. and the tenure is 20, 21, 22, 23, 24 years, and so,
All right.
6 policies.
All right. And you haven't bought a house yet, and you obviously don't have a home loan.
I don't have a house, right?
Okay. You do plan to buy a
I
house,
do.
so?
I do.
Okay. And your spouse, I take it, is not working.
She is not working.
She's not working. Okay. So basically, the way I understand it is, there's a 15 lakh income annually, which after tax comes to roughly about 11 lakhs or so, which is roughly about 1 lakh a month. About 40,000 goes into expenses, so there's about 60,000 rupees left. However, there's a loan being repaid. The loan repayment is about 25,000 rupees.
30.
About 30,000 rupees. It's going to continue for another 2 years or so, 2 to 3 years. So after that, the salary may also go up, and there will be a large proportion that can be invested. Currently, there is no health insurance plan, no
There is no health insurance.
no term cover. So from a risk perspective, nothing has been planned. The 2 lakhs savings at this point are quite small compared to the responsibilities that will come in. So it's a different kind of situation. Having 6 traditional endowment plans is also a question mark. I was going to ask how, but I can imagine that a great amount of thinking may not have happened. Did any thinking happen behind kind of having 6 traditional investment plans?
I'm sure not a lot of thinking went into that, and
Okay.
it's been a while that we
Okay.
have had those policies.
All right, fine. So great. So see, would you like to share anything about your short-term goals besides you mentioned retirement as a long-term goal, but besides the house, is there any other short-term goal that you have or a medium-term goal that you?
I wanted to start investments. I
Okay.
wanted to do some systematic investments with say 25 to 30,000 that I have, because I'm
That's fine.
currently not doing anything
Okay.
on that front.
So I think let's again do the same thing. Break it up into long-term goals, short-term goals, and risks. If we look at the long-term goal is 30 years. There should be enough of a corpus built up for retirement. Looking at the situation, there is a very easy possibility for investing about 30,000 rupees every month into, again, a ULIP kind of instrument. My reckoning is, given historically how the markets have been, if the markets were to perform even close to that, that would lead to almost a 15 crore amount at the end of 30 years, which is a very significant amount that can also lead to almost 8-10 lakh rupees of monthly income. Now you have said 2 lakh rupees is your kind of retirement, is the retirement goal.
But 30 years from now.
30 years from now. So if you look back 30 years, I look back, 30 years is kind of when my parents were earning about 2,000-3,000 rupees a month, and today their pension alone might be 50,000-60,000 rupees a month. So clearly, times change, and the 2 lakhs will not mean too much 30 years from now. So I think what you may need to plan for is more like an 8 to 10 lakh rupee retirement income, which you can manage. You've got 30 years ahead of you. With just 30,000 rupees a month, you could get there. But it has to be in ULIPs, not in traditional plans, because in a traditional plan, the return you would get will be about 1/4 to 1/8 of that. I think the traditional plans one has invested in already. So I would use them as a medium-term plan. They've been invested in for the last 7-8 years. They are 20-year plans. So about 10 years from now, about the time when the kids would be in school, some expenses would be there, these traditional plans will become due. They will not create a huge amount of return. They will pretty much give you back the money that you invested with maybe 2-3% returns, but they are okay. So there's no point cancelling them, because if you cancel them, you get nothing back. You'll get just about 20-30% of what you invested back. So keep them. Then they'll become a good recurring.
Because at this time, if he does cancel it or takes the money back, there's nothing that he's really going to get, right?
He's going to get back about 20 to 25% of what he's invested. So about 70.
So
70%.
It's a loss situation. But Yashish, we have to take a short break. But when we come back, we'll discuss your portfolio in detail. But you can write your queries on ask.policybazaar.com. You can also contact us on Facebook/PolicyBazaar India, or you can tweet your queries on Twitter @PolicyBazaar_, and we'll see you shortly after this break. Keep watching Policy Bazaar.